Welcome to MITS 90.8 Community Radio Station. Myself, Dr. Nagella Venkata, Assistant Professor, Department of Humanities. So today, the topic is how to write journal entries. Before go to topic, let us know the basic rules of accounts. How many types of accounts? What are the rules of accounts? Generally, the accounts are two types broadly. One is personal account, another one is impersonal account. The personal account again classified three categories: natural person, artificial person, and a representative person. Artificial person means human beings. For example, Rama account, Gita account, Mohan account. These are the examples of artificial person. Natural person means incorporated, and which are incorporated under the law, under the act, is called artificial person. For example, ABC Limited Company and Bank of Baroda, HDFC Bank, XYZ Limited Company, LIC. So these are examples of natural personal accounts. The next one, representative person. Here representative person, it is comes natural person as well as artificial person. It is indicate previous year and coming year. The examples of outstanding expenses, prepaid expenses, these are the examples of representative personal account. Here, what are the rules of personal account? Debit the receiver. So whenever you are receiver, you write down debit side. The giver, you write down credit side. These are the rules of personal account. Here, impersonal accounts again classified real account and nominal account. Real account, it is also called asset account. Why? Because it is always represent assets. So example, machinery, furniture and land, etc. The rules of real account, what comes in? Here what means assets comes into the business. At that time write down debit side. Assets goes out from the business, you write down credit side. So it is the rules of real account. Here assets are two types: tangible assets or physical assets, intangible assets or non-physical assets. Tangible means those assets which can touch and visible, these are called tangible assets. The example, machinery, furniture, tangible assets. Intangible assets means which are not seen and which are not touched is called intangible assets. The examples, goodwill, royalty, trademark and copyrights. So rules of real account: debit what comes in and credit what goes out. The next the next one, nominal accounts. The nominal accounts, it is always indicate expenses, losses, incomes and gains. The example, purchase, sales account, rent account and salary account. These are the examples of nominal account. The rules of nominal account: debit all expenses and losses and credit all incomes and gains. So these are the basic rules of the accounts or golden rules of the accounts. So whenever you are know the basic rules of the accounts, easily you can write the journal entries for the transaction. Then we can go the proforma of journal. Here 5 columns are there. So one first column date, the second column particulars, third column ledger folio, and fourth column debit rupees, and last column credit rupees. So ledger folio, it is a for reference purpose or maintained in the company. So it is the proforma of journal. Okay, next one, the example. How to write the journal entries for the transaction. The transaction means minimum required two persons. Minimum required two persons. In between the two persons exchange is called transaction. So in this example, the first one, 2023 October 1st, Raghu started business with rupees 40,000. So it is the transaction. In this transaction, two aspects are there. In this transaction, two aspects are there. First, you can read out the transaction and find out what are the two aspects in this transaction. Then we can apply the rules of the account and we can write debit and credit. So Raghu started business with rupees 40,000. In this transaction, Raghu is a owner or proprietor. So Raghu is one aspect, the cash is 40,000 another aspect. Then Raghu comes under which account? You are identifying. The cash comes under which account? You are identifying. The cash is current assets, so it is real account. The Raghu is a personal account. It is the name of the person. Now you are applied the rules of the personal account and real account. The personal account, as per the personal account, debit the receiver and credit the giver. But in this transaction, the Raghu is a giver. So you write down credit side and cash comes into the business. So it is a asset. So as per the real account, the rules of real account comes into the business, you write down debit side. So the first two transaction, the entry is as per the account's rules. So cash account data to Raghu account. But one exemption is there. The Raghu is a owner or proprietor. Never write the owner name in his account books. On behalf of owner name, you write down capital account. The capital is also personal account. So the first transaction, the entry is cash account data to capital account. The second transaction explanation, the date is 2023 October 5th, deposited into the bank rupees 4,000. So it is the transaction. The first you are read out the transaction, that is deposited into the bank rupees 4,000, and then you are identify what are the two aspects in this transaction. So in this transaction, two aspects is cash and bank. The cash is real account, bank is personal account. So then you are applied the rules of the account. The bank is a personal account. As per the personal account rule is debit the receiver, credit the giver. The cash is real account. As per the real account rules is debit what comes in, credit what goes out. As per the business point of view always, the cash deposited, it means the cash goes out from the business. So you write down credit side as per the real account. The bank is personal account. As per the personal account rules, debit the receiver. In this transaction, the bank is receiver. You write down debit side. So bank account data to cash account. The third one, 2023 October 10th, purchased goods rupees 6,000. So in this transaction also, the two aspects are there. One is purchase, another one is cash transaction. So it is the cash transaction. So cash is one aspect, purchase is another aspect. The purchase is nominal account, cash is real account. Now you are applied the nominal account rules and real account rules, then you write down which is debit and which is credit. The purchase is a expenses. So as per the nominal account expenses, you write down debit side. The cash is goes out from the business. As per the real account, you write down credit side. So the entries purchase account data to cash account. The next one, 2023 October 15, sold goods rupees 8,000. So sold goods. So in this transaction, sales and cash, two items are there. The sales is a nominal account and cash is a real account. The sales is revenue. So as per the nominal account revenue, you write down credit side. The cash is comes into the business. As per the real account, what comes into the business, you write down debit side. So in this transaction entries, cash account data to sales account. The next one, 2023 10 18th date, purchased machinery rupees 5,000. The machinery and cash in this transaction, two items, machinery and cash. Machinery is asset, so it is comes under real account. Cash also asset, comes under real account. Then you are applied the rules of the real account. As per the rules, what comes in debit, what goes out credit. In this transaction, machinery comes into the business, you write down debit side. Cash goes out from the business, you write down credit side. So machinery account data to cash account. The next one, 25th October 2023, sold goods to Ganesh. So in this transaction, two items are there, Ganesh and sales. So it is a credit transaction. It is not cash transaction. So in case of credit transaction, definitely you write down name of the person. So in this transaction, two items, Ganesh and sales. Sales is a nominal account. Ganesh is the name of the person. So it is the personal account. In this transaction, the Ganesh is receiver. So write down debit side. Sales is revenue. As per the nominal account, you write down credit side. So Ganesh account data to sales account. The next one, October 31st, 2023, salary 4,000 rupees. In this transaction, every month the owner paid salary to the employees. So in this transaction, the cash and salary, two items are there. Salary, nominal account, cash is real account. So here salary is expenses in business point of view every month. So as per the nominal account expenses, you write down debit side. The cash goes out from the business. As per the real account, you write down credit side. So salary account data to cash account. Then you see journal entries in the book of Raghu. It is the heading. So everyone, you write down the heading top of the table, journal entries in the book of Raghu. Raghu is a owner. So next one, the proforma and five columns are there. Date, particulars, LF ledger folio for reference purpose only maintain, debit rupees and credit rupees. The first one, October 1st, 2023, started business. Raghu with rupees 40,000. So here, cash account data to capital account. So cash is real account, capital is personal account. So cash comes into the business as per the real account debit side. Capital is personal account. The giver you write down credit side. Then within the bracket, always write down narration. The narration means brief explanation about the transaction is called narration. So here, being started business with the cash. So it is called narration. The narration always put it in the bracket. So after that, you draw the line. The line is indicate complete the transaction. So 40,000 rupees debit side and 40,000 rupees you write down credit side. The same amount you write down debit side and as well as credit side. The next one, October 5th, deposited into the bank. Here deposit means cash deposited. So cash is real account and bank is personal account. So here the bank is a receiver as per the personal account. You write down debit side, cash is goes out, you write down credit side. So the narration being cash deposited into the bank. So it is the narration. Narration means brief explanation about the transaction. Always the narration put in the bracket. So the amount is 4,000 debit side and amount 4,000 you write down credit side and draw the line. The next one, October 10, 2023, purchase goods. It means cash transaction. So purchase goods for cash. So here the purchase is expenses. As per the nominal account, you write down debit side. Cash goes out. As per the real account, you write down credit side. So narration, Being purchased goods for cash. So amount 6,000 rupees debit side, and the same amount again you write down credit side 6,000 rupees. The next one, October 15th, 2023, sold goods. It means cash transaction. Here, cash and sales. Cash is real account, sales is nominal account. Here, cash comes into the business debit side, sales is revenue, so credit side. Sales account debtor to, sorry, cash account debtor to sales account. So, being sold goods for cash, it is narration. So, amount is debit side 8,000 and the same amount, and credit side 8,000 rupees. Then October 18, 2023, purchase machinery. So transaction. In this transaction, machinery and cash, two items are there. The both are real account. So machinery comes into the business. You write down debit side. Cash goes out. You write down credit side as per the rules of real account. So machinery account debtor to cash account. So amount is 5,000 rupees debit and amount 5,000 credit side. So the narration, being purchased machinery for cash. The next one, sold goods to Ganesh. So in this transaction, two items Ganesh and sales. The date is 25th October. So Ganesh is personal account. The receiver, so you write down debit side as per the personal account. And two sales is nominal account. It is revenue. You write down credit side. Being sold goods to Ganesh. So amount is 3,000 and amount 3,000 debit and credit. The last one, 31st October 2023, salary paid every month by the owner or proprietor. So in business point of view, it is the expenses. As per the nominal account expenses, you write down debit side. You are paid in the form of cash to the workers. So cash is real account. So goes out, you write down credit side to cash account. The narration is being salary paid. The amount is 4,000 and credit side also 4,000 rupees. So salary account data, it is the first sentence. Don't write the within one sentence salary account data to cash account. Salary account data is one sentence. Then you can start the second sentence always with two. So to cash account. Don't write everything in single sentence. The cash account data is one sentence. Then we can start the second sentence with two always to cash account. Okay, thank you.